SEC awarded nearly $600 million to whistleblowers, which is a record high sum. Why is that so important that you want to help whistleblowers, or at least know that, give them that support?
So, to instill trust in our capital markets, Congress gave this agency civil law enforcement authority. And then along with the Department of Justice, we help them on the criminal side. Well, instilling that trust, basically markets are not going to work unless you have an active cop on the beat. So let me give you some figures that are public. We get between 40 and 50,000 tips, complaints, and referrals a year. Think about that. 4,000 a month, and we only have 1,300 people out in our enforcement division. So whistleblowers are a really important part of the system as well, and I want to give a big shout out to Senator Chuck Grassley from Iowa, who's really been the kind of the leader on this for many decades and putting that law in place. So we can award people awards, whistleblower awards, if they, it's technical, but basically if they help lead to money coming back in and disgorgements and like that. And so that's a really important thing, and it helps ultimately instill better trust in our capital markets. That now we get about 18,000 whistleblower tips a year. And so that's folks all across this great land coming in and suggesting something. Now, we only bring about 400 or 500 law enforcement actions a year, new actions. So there are a lot of things that when we look at them, we close them out. We look at them, the facts of the law don't suggest something was infraction. But where there is an infraction, those whistleblowers help us. And they ultimately help you all in the audience because they help instill greater trust in the system.
What does that say to you about why the kind of policy making that you've been pursuing is necessary?
Well, I think the policy making is necessary because technology is changing so rapidly in business models. That's what this conference is about, Money 2020. It's about, I know you're talking a lot about open banking, a lot about artificial intelligence. These are changing the way that people invest and money moves around the globe, how information moves around the globe, and ultimately the human existence itself as we automate that which is in our brain through artificial intelligence. And so as markets, technology, and information change, it's critical that our rules also change for the highways of finance.
And a lot of times regulators are criticized for moving too slowly on their rules, not keeping up with the pace of innovation. It seems like you want to take the opposite approach, and you're projecting potentially some of these challenges. Is that why you're going after, let's say AI washing is a big one for you lately?
So 2 points. I do feel with the privilege of service comes a responsibility of the public to lay out an agenda and move on that agenda. And where appropriate to back off. We don't bring enforcement actions against every folk we investigate, and we don't finalize every rule that we propose. But I do think that with that privilege comes a responsibility to move within one's time. In terms of artificial intelligence, look, I think it's likely to be the most transformative technology of our time. And I'm not just talking about generative AI. Artificial intelligence has been used for 10 or a dozen years. Even the U.S. Postal Service uses it. Come on. I mean, it's right, you know. And so many of the members of that your audience there are using it, have been using it for years before generative AI. But with that incredible transformation, we can drive to greater efficiency, we can drive to greater access in our capital markets, but there's also some things to think about, and you mentioned one. You know, I don't know, that old saying, do what you say and say what you do. In essence, don't lie to the public. So there are some folks that are out there bragging about using AI or using AI in a certain way, and they're not even doing it. But I would say the same thing, don't brag about anything. If you're doing it, don't do it. You know, say what you do what you say. That's the kind of saw that a securities regulator would say if you're a public company. If you're a private company, then you've got it do that with your customers and with your board of directors. But that's a little different.
Well, where else have you seen, and I mean, I think the USPS might have a word for that shade that you threw at them, but where have you seen technology innovation help with transparency, and where have you seen it actually be harmful?
Look, I think technology innovation has helped throughout the decades. I mean, the ticker tape itself, and the Quotron machine, and then after that, Michael Bloomberg figured out how to build this incredible empire, the internet itself. And we've driven down in our capital markets, in the U.S. capital markets, we've driven down the cost of trading in our stock markets through brokerage applications, robo-advisors, and so forth. But if 50 plus million Americans, and that's the real number, 52 or 3 million Americans have investment advice right on their cell phones. So let's call most of those are robo-advisors. That can drive down costs and broaden access, lower the fees, but it's also important to make sure that we don't put in conflicts in the algorithm.
Right.
So the optimization functions are still putting the customer's interest ahead of the investment advisor rather than the other way around. So, the old rules still apply. I'll say one other thing. Frankly, fraud is fraud. Don't use the artificial intelligence to lie to the public or do a deep fake or create some scenario that's not real. And if you're the one deploying the algorithm, don't use it to manipulate markets. And by the way, the algorithm itself is still yours. You're deploying that algorithm.
Yeah, a FactSet search of the term AI has come up with a record number just in the first quarter in terms of earnings reports. I'm wondering if you feel that's too much, but just broadly.
No, by the way, I don't. I don't think it's too much or too little. What public companies have done for decades, they do really well in the main. There's always going to be outliers that do poor things. They describe to their shareholders what they're doing, what their material risks are, what the opportunities are that they're facing. And artificial intelligence is one of those things. And it's an opportunity as much as it's probably an opportunity more than it is a challenge, but it's also going to change so many things. Many of the companies in the audience there will be the disruptors, and they will disrupt the largest financial institutions. I can't tell which one of your audience members is going to be like that big company 5 to 15 years from now, but somebody in that audience is going to really disrupt big banks and Wall Street. And that's a good thing for America. I'm just saying don't lie about it.
So FactSet shows that there were about 200 mentions of AI, which is more than double the 5-year average. In your mind, what percentage of that do you think is AI washing?
I don't have a number, and hopefully very little of it. But look, this happens over time. In the internet bubble in the late 1990s, there was a lot of we're doing this with the internet and so forth and so on. So in times when it catches the investor's fancy, of course, most C-suites, the chair and the CEO suite and everything, are thinking about how do I market to investors. So you just want to be careful not to get out over your sort of exaggeration skis on that. You don't want to greenwash either. I mean, that's the core thing. Investors are savvy. Ultimately, they'll figure it out. But there's a real benefit to the capital markets that we have anti-fraud provisions, and that's I don't have any estimate for you, and hopefully it's small, but even that small group needs to, shall we say, behave.
Is the SEC using generative AI right now? Are you using it in your own life?
We use artificial intelligence. We do it sometimes in their surveillance. We have 5,000 folks at the SEC. They use it to sort of look at market data, particularly in our market oversight, our examination and enforcement. Our economists use it, but it's not necessarily generative AI. I just want to say that.
Okay, so you have led this organization through a big crisis, the GameStop saga. I'm wondering what lessons you learned from that.
You know, it was interesting. It was right before I came into office. Jen Psaki, who was then the White House press secretary in her first week of the job, was like, oh my God, all these questions are coming in. I'd say a couple of lessons. One, the plumbing matters. Some of the stuff that, again, many of the members in that audience focused on, how to move payments, how to connect APIs, this whole open banking movement and so forth, which is not new, by the way. Other countries have leaned way into it. Even when I was back at MIT, I took one lecture a year in my fintech course and taught about open banking. But back to GameStop, I think the market plumbing work matters. And unfortunately for a lot of investors, they got shut out of the market. And I think that was unfortunate. It's not good to shut people out of the market. So we updated, and as I said, we shortened the market plumbing to 1 day settlement rather than 2. I think another thing was the use of what was called gamification, but behavioral prompts and nudges. We all get them. We get them on the streaming apps. I get them for romantic comedies. I hope you might get them for other types of movies, or you might get behavioral prompts about some journalist at Axios' great story. But in finance, if you're giving behavioral prompts to somebody, still you've got to put the customer, the investor, ahead of the brokerage app. You've got to put the investor ahead of the robo-advisor. And I'd say the third thing was really about the market structure itself. We had not updated our U.S. equity market structure since 2005 in any significant way. Some of my predecessors had taken a run at it. But we proposed, we adopted unanimously, I would say proudly, real changing rules around the markets to lower the costs, the fees coming down by 2/3, from 0.3 of a penny to a maximum fee of 1/10 of a penny, and also allowing more efficient pricing where the quotations can be down to half a penny instead of a penny. So those are some of the lessons out of those events from early 21.
And do you believe that Robinhood is now safer or better than it was 3 or 4 years ago?
I'm going to speak about one broker versus another broker. That's for everybody to figure out which brokers they want to use. But I think that the rules that we put in place about central clearing, the rules that we also put in place that investors can get more information about their execution quality, that will enhance their experience. And the rules we just adopted, which go into effect next November, I think will lead to less costly markets, more competitive markets, and I think shortening the settlement cycle makes the whole system safer. Similar to what we did on money market fund reform, that we learned some things when the COVID crisis hit in 2020, and we addressed that, and also what we're doing in the $28 trillion U.S. Treasury markets.
Just really quickly, early thoughts on the New York Stock Exchange's proposal to move to 22-hour trading?
Look, it's interesting. I can't speak directly to that because that might be a filing in front of us. I might have to vote. So just for all of your members, I'm not trying to avoid the question. So let me just a little bit more general than one filing. We are the market of destination, and you sometimes think about that from 9:30 to 4 o'clock. So you can do the math, 6.5 hours. But we have the night market also from 4 to 8. We have the early market right now already from 4 a.m. to 9:30 in the morning. Overnight, in Asia, you can trade U.S. securities over the counter and on what's called alternative trading systems. So to the extent that we have a 24-hour market in many assets, U.S. Treasuries trade 24 hours a day, 5 days a week, a little bit on the weekends. U.S. equities for the top 100 names generally will trade around the globe. Best liquidity, deepest market during 9:30 to 4 p.m., but people can trade it around the globe. And so whether it's the New York Stock Exchange, NASDAQ, Chicago board, SIBO, we also have a filing in front of us for a new exchange called 24X. I'm not going to speak on any of those, but I'm saying it seems that the market has asked, maybe we can expand these hours out. And what's critical is, are you protected?
Yeah.
Will you be protected, and is it transparent? Will you get what's called a tape?
Yeah.
When I was growing up, we still called it a tape, but basically a consolidated information about the transactions in a real-time basis. Overnight, at 1 a.m. and 3 a.m., where you get, it's called a SIP, but that's a tape. Will you be protected with pockets of illiquidity in something that's called a limit up or limit down? But I digress into the technical side of the job.
Really quickly on crypto, what do most people get wrong about where you stand on crypto?
It's a great question. Look, I'm going to say this. Later this week is Sweet 16 to Satoshi Nakamoto's white paper, 8 pages, which was and still remains an innovative paper about data processing and ledgers, what we all come to call blockchain technology. But that's not the question. The question is, if you are asking the public for money and that public is investing in something, therein lies protections that Congress put in place in the securities laws. And those protections are important protections. And it really comes down to this. It comes down to investors get to decide, as long as the folks raising the money, the entrepreneurs, are giving them disclosures on the material risk.
Yeah.
I'd say the second thing, Hope, is I sometimes hear about digital assets and so forth. Everybody in that audience, everybody in the Money 2020 audience deals in digital assets right now. I mean, how many of you have actually get your pay delivered in coins and paper currency? You don't. How many of you bought your airline tickets in coins and paper currency? You don't. We live in a fully digital money world right now. And whether it's digital dollars, digital yen, yuan, euro, sterling, we live in a digital world now. It's against the law, actually, to have paper treasury securities. The U.S. Treasury Department issues digital. So you've got to have a value proposition that's something beyond digital, is what I'd also say.
I want to know if you have any regrets about the way that you may have handled the regulation.
Look, I think there's nothing incompatible about Satoshi Nakamoto's innovation. It's a real innovation about how to have a decentralized ledger system. There's nothing incompatible about that in the U.S. securities law. That fundamentally, the U.S. securities law is about protecting investors that are investing in somebody else's project, hoping for a better future. And I've said this, I'm not prejudging anyone's token, but there's 15 to 20,000 of these projects, and though some of them are not under the securities law, many of them have a group of entrepreneurs in the middle, and the investing public is hoping for a better future. And it's a field where there's billions of dollars of losses have happened. And you know, we don't need to go through some of these, the most famous 2 years ago are, you know, in jail right now, and not just one of them, but multiple of them. So
But many more are not, right? I mean, many more are not. So do you have any regrets?
What I'm saying, you say, I would. The only way, whether it's in any part of our broad capital markets, and our broad worldwide capital markets are about 250 to 300 trillion. U.S. is 120 plus trillion of that. Any part of that worldwide capital markets, they benefit from rules of the road. I'm unabashedly a market person. I'm unabashedly associated with this great thing in America called capitalism. It's a really important thing, but I think we do better, the public does better, with some regulation in markets. You wouldn't want to have a football game, by the way, without some refs on the field. It would very quickly look like rugby, and after a while, it wouldn't even look like rugby. It would all break down. And Congress understood that in setting up the SEC and setting up the Commodity Futures Trading Commission. These help capital markets work, and they lower the cost of capital.
Right.
And how did they do that? Because they instill trust, and they bring the investing public in. We've got more than 50 million Americans with separately managed accounts by investment advisors. We've got 58% of the American public invested directly or indirectly in the U.S. stock market. How do you build that trust without some, rules of the road around disclosure, around conflicts, around manipulation and the like?
So no, you don't have any regrets.
Again, it's how you're articulating the question. I've already told you that I think there's nothing incompatible with this technology, the blockchain technology, and how you store this with the securities laws. Far too many people have lost money, and I'm not just talking about normal markets ups and downs.
Right.
I'm talking about the extent of problems and grift in the field.
All right, well, we'll move on. How do you think capital markets will be impacted by seemingly deeper political divides and geopolitical tensions?
I think capital markets trade around all sorts of information and all sorts of risk. Ultimately, we benefit from the pricing of risk and the pricing, and I would say allocation of money and risk. And I think, again, I'm not going to comment on elections. I'm paid not to do that, Hope.
Yes.
When I think the capital markets, our U.S. capital markets are quite robust, and they will persist. My job and what I do is trying to make them the most efficient, most resilient hopefully for decades to come.
Does the political environment, though, make it harder for you to do your job? I mean, this summer, the Supreme Court ruled that defendants accused of fraud by the SEC have a right to a jury trial. So how has that impacted your enforcement?
Let me say this, I'm quite proud. We're a 5-member commission, and I think we're better as a nation than it's 5 of us, not 1 of us. I think that's really helpful. We vote on about 11 or 1,200 things a year, literally. You're more familiar with some of these policy matters, which are rules, but even on the 44 rules that we voted on, over half of them are bipartisan. We just finished one last Friday on clearinghouses, unanimous, but the large equity market rule was also unanimous. Things like how funds, registered investment funds, name themselves and so forth was bipartisan, it was 4-1. On and on, I could talk about the work we do with our colleagues. We're not always that way. There are times where we're split 3-2. But I'm very proud, and I think the public benefits from that ebb and flow and that back and forth amongst the 5 of us. Now, in terms of enforcement and rulemaking, we do it within what the Congress writes and how the courts interpret it. And if the courts interpret something differently, as they did, you were talking about a case called Jarkissi.
Yes.
The Supreme Court ruled one. We adjust, but we had already been, I would say, pre-adjusting in that case. I think we were down to less than a handful of litigated matters in front of our administrative law judges, even before the Supreme Court, down from 50 to 100 right before I got there. So we had been adjusting already, but if the court rules in a way that we didn't think they would or we didn't agree with, we still adjust. I don't know. What would you do? That's part of our great democracy, and that's so. 1, because it's the right thing, and 2, it also instills confidence in the SEC that you say, they get it. The court called it a different way.
Chair Gensler, we're out of time. So my last question to you: when I was invited to to talk with you in this fireside. I was very excited. I was telling my colleagues, and one of them said to me, wow, Money 2020, I mean, this crowd hates Gensler. I don't know if you knew that, or now that you do know, I mean, is that a sign for you that you're actually doing your job? Is that the middlemen maybe that you're targeting and trying to make more transparent, that's your goalpost of how you measure success?
No, hope I don't measure success through the animus that what we do. So, but
do you have any final messages to them?
Wide range of folks, whether they're financial technology firms, whether they're in finance itself. My God, I'm 18 years at Goldman Sachs. I spent 4 or 5 years up at MIT because I was asked by now a Nobel laureate, Simon Johnson, recruited me to go up there, but my God, he's a Nobel laureate now. But Simon invited me to go up there and what better place to do it but to the intersection of money, finance, money, and technology. And I think that we constantly are changing, and I want to see how we can better do this for investors and issuers. But yes, there's some that are going to be the market intermediaries in the middle, people that are operating the stock exchanges or the clearing houses or the brokers or investment advisors that have different incentives than somebody like I do. Now, if I was still at Goldman Sachs, I might not like some of the things I'm doing. But my job is for 330 million Americans, and we do it with an openness. We want to hear the comments. We want to hear the feedback. When we lose in court, we adjust. But our clients still ultimately the 330 million Americans. And the entrepreneurs in the room that are trying to start out and access capital and take on the incumbents. And I have deep respect for the trade associations as well, but sometimes their associations are, have the large incumbents that are important members for them. So, but keep the comments coming. That's how we do better.
I mean, it seems like sometimes people who are in this room and outside of this room trying to make money forget that they are part of the 330 million Americans that you are also trying to protect. This is almost like sometimes maybe you're seeing it in the way that you do your job, that maybe sometimes we're working against ourselves. Is that right?
Look, I would say this, anybody who wants to do a job in public service, it's the greatest experience, but it's not for the faint of heart because there's an awful lot of discourse, there's a lot of, public debate means debate, right? It means people are going to disagree. And all we can do is just make our best judgment given the law and the economics of the time. But I'd say for folks that are also in the room thinking about how do you want the markets to be structured so you still instill a great deal of competition in the market for money and the intermediation of risk. That's what we're in. We're not in the market for competition for widgets or competition for all the great products that you're servicing people on. But for the intermediation of money and risk, that's our capital markets. What we're trying to do is use the tools of transparency, the tools of access, the tools of competition to promote lower cost. And that's what my predecessor have done. That's what the next 33 will probably do as well.
Well, I hope you get another chance. It was such an honor, Chair Gensler. Thank you for spending time with us, and thank you here in the room as well.
And thank you all for allowing me to do this.
Thank you. Take care.